Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
It's going great. Just rounding off a busy work week, preparing for the weekend. I have my kids coming over, so can't wait for that. What about yourself, Raphael? How's it going over there?
Yeah, it's going great. I think, as we're recording this, it is early 2022, and we've been getting a lot of calls from people looking to start a business, looking to expand their businesses. And so I really think that 2022 is going to be a pretty robust year for business across the nation. And so, I think a lot of people are kind of over the COVID situation we find ourselves in, and people are starting to get back to business, as they say. So speaking of just having a phenomenal conversation about business and brokerage, we actually had a phenomenal guest this morning, and his name was Gabe Marans, Executive Managing Director at Savills. Again, he's just an impressive individual. Kind of started his career in the investment banking space, and then after the 2009 financial crisis, jumped into to a career in the commercial brokerage business, and he's been at Savills since 2009. And some of the things we talked about during our interview were pertaining to the commercial real estate brokerage business, in particular as you're first starting within your career. He kind of shared some insights about some of the early struggles he faced and some of the struggles he continues to face, even though he has advanced significantly in his career and had a lot of success. Everyone continues to have struggles. And so he kind of shared some insights regarding those struggles. We also talked about some of the missteps that business owners take when they're evaluating their space needs, because it's not inherently obvious that if you meet these certain criteria, then this is exactly what you are going to move forward with as far as your space needs are concerned. He did get a lot more granular to kind of say, okay, these are exactly what you need to consider, and maybe some modifications to these requirements are required in order to make sure that business owners modify the space to fit their needs. And then finally, we talked a lot about, this identification process for a tenant, what exactly subleasing is, subleasing is within the New York market, and some of the requirements and some of the obligations that business owners still maintain as a result of subleasing space. And then we kind of rounded it out with the interview pertaining to, how he sees the market for office space looking like post-COVID, and then how he's able to scale his LinkedIn presence. And if you haven't had a chance to follow him on LinkedIn, I would highly encourage you to do so. He provides a lot of great value to people, both with content pertaining to his personal and business life. So really, it was just a phenomenal conversation on brokerage, strategies within brokerage pertaining to the office market, and then finally about brand building within, your business. So again, I really enjoyed our conversation. Jeff, what did you think about that?
Yeah, he was great. I like that point that he pointed out that at an early part of his career that his entrepreneur fire grew from him just being an intern at a real estate agency. So that's what I took from the major thing, and I think that you guys can relate to him on. And I look forward to seeing what you guys think about this episode. Also, I just wanted to come out and say we really appreciate all the reviews that everyone has given, and to keep that up, because that's really helping us out grow this podcast and reach more people. So we really appreciate that.
Definitely. And I'll echo that as well. I mean, we've seen a significant uptick in our downloads as a result of you guys leaving reviews and engage with the podcast. So continue to do so. And, I really, truly think you guys are going to gain a lot of value from this episode. So without further ado, let's go ahead and dive right into the podcast. Well, hey, Gabe, great to see you this fine morning, tuning in all the way from New York City. So welcome.
Yeah, thank you. Thank you. Good to be here. Good to see you guys on this cold January morning.
Oh, for sure.
Yeah.
No. Go ahead, Jeff.
I was going to say it's cold down here, so I'm sure it's very cold up there. So I think we're all going through it. So yeah, thanks for coming on, though, Gabe. We really appreciate it.
Yeah, it was 9 degrees last night in Louisville, Kentucky. So I can only imagine what it was in New York City. But we're looking forward to brighter days ahead. And I think 2022, even through, just the calls we've been getting at our office, it seems like people are very optimistic about what business holds in 2022. So I think it's going to be a really great year. But
yeah, I mean, we're really optimistic. I mean, if you think about it, Fred Wilson, who's one of these leaders, particularly in New York, one of the early New York VCs, he penned this fantastic post earlier in the week where he just talks about how it's time to heal, how enough talking about what's going on, it's time to heal. We have all the necessary pieces in place. And he makes the argument that what you're seeing right now in the larger market is a repricing to recognize that we're in the post-COVID world, all of which is really encouraging. So I agree with your assessment. 2022 is exciting for a number of different reasons. And the top of that list is what we shall call getting back to normal.
Oh, 100%. And I think you're seeing it in the broader populace. The sentiment is saying, okay, let's get back to normal. It's been 2 years of this, and really it's time to get back to normal. And really the economy has a lot to offer those individuals who are willing to capitalize on it. So one thing we like to do when we first get started with the interview is learn a little bit about the person that's across the table from us. So if you don't mind kind of sharing your backstory and really what got you interested. So.
For sure. Hopefully this doesn't scare away too many people because my story is really very one-dimensional. So I'm New York born and bred. I went to school in New York. I went to college in New York, and I was set to go into investment banking. All my most ambitious friends, that's what they were studying for. So I said, you know what, I'm going to aim for that. And I worked really hard. I interned at all the right places during semesters so that I had a competitive edge on people not in New York. And I got a job offer to work in investment banking at Bear Stearns for summer of 2008. And so I then, having known that I locked up my whole future, I then go abroad to Prague, spring of 2008. I'm sitting there, I think on a BlackBerry or a Trio. I get a note that like Bear Stearns is going bust. Like the next thing I know, like I'm job searching. I emailed everybody in my contact list, which is really at that age, my parents' contact list. Somebody knew somebody at Savills. I interned that summer instead in real estate, didn't know what anything about it. And that was almost 14 years ago, and I haven't left. So my story is pretty one-dimensional. I'm an accidental broker. I'm passionate about what I do, which keeps me interested, but it's kind of hard to replicate that if interested in this career.
Oh, for sure. But one thing that we've noticed by a lot of people who get in the brokerage space is that they don't necessarily ever thought they'd ever be in the brokerage space unless their parents or some other person close to them was in fact in the brokerage space. I come from an engineering background. I was a software developer and then got into the commercial brokerage space. And we've interviewed people from all across the nation who have had different backgrounds and they all of a sudden found themselves in this space. And again, I feel like a lot of people have a similar story in that it's somewhat of an accidental career, but you've made a huge, you've made a big deal or growth through that experience. And so, that's awesome.
Yeah, go ahead, Jeff.
Well, I was just going to say, from your aspect of so that whole story that you just told, and you were talking about like you went into the real estate broker, but what was there a key moment or something that like keyed you or interested you, Justin, to pursue the actual career and fully just dive right into commercial real estate? Can you tell us a little bit more about that?
I certainly can. So I try to dedicate as much time to mentorship as possible. And so I try to think about this in a structural way. And I think that, first of all, everything is hyper-personal and also situational. There's a lot of luck that goes into the success in any career, particularly in ours. And yet at the same time, I graduated in 2009. There were no jobs. I took a 100% commission job because there were no other jobs. I took the LSATs. I was getting ready to go to law school because even though I had interned at Savills the previous summer, they weren't returning my calls because nobody knew what the world had in store. And so I didn't have any other options. So it kind of kept me into it. The second part of it is it awakened in me what is now, looking back, very clearly present throughout my whole young life, this entrepreneurial spirit. And I love being able to build your own business, and to do your own thing with some support and structure from a larger organization, and the different things that you can do so you really don't get bored and just kind of siloed in a single thing. And then the community within real estate, it's huge. Real estate is huge, a lot of different corners, and meeting the people through it all. And so I think that just this thirst for learning and bettering and my curiosity fed on itself, also knowing that I didn't have a choice. And then by the time I looked back in the rearview mirror, I was hooked. I was addicted, and there was no turning back.
That's phenomenal. Yeah. And like you said, regarding the mentorship piece, I mean, finding that individual who can really take you under their wing and support you. I mean, similar to you, I didn't have necessarily a background in real estate before diving into real estate. And the brokers that I ultimately went with, the big reason why I'm still there and I've had early success in my career is because of those individuals who I was able to ask questions to, who I was able to tap into their knowledge base and even their connections. Because I imagine in a city like New York, I mean, you're having to leverage relationships from all these different players. And granted, you are from New York originally, so I'm sure you had some initial relationships to tap into. But from the broader business community, having a big name behind you like that, and then having those mentors who already have some of those established relationships, I'm sure helped a lot, especially as you first got started in your career. So.
No doubt. You'll have these creepy moments when you find yourself using words or phrases that are foreign to you, and you realize you're just really repeating what you've heard from your mentor in the room before. And yes, I mean, I think there's a large degree of reputational leveraging when you're young in any sort of business, because if your mentor is well respected, you will by default be respected. You'll have to prove yourself. But you will have a leg up in terms of starting. New York's a huge market. It's 450 million square feet of office space in Manhattan alone. It has a shark-like reputation. I can tell you that it's not nearly as bad as some of the stories, and yet some of the stories are much worse than what you might think. So it certainly requires some thick skin. But the people who you work with is everything, and the culture here is just extraordinary. And these people have seen me grow up. They've seen me go from being a kid, barely shaving, to being a dad. So it's pretty cool.
Yeah, and now a leader within the organization, driving it forward into new heights. So that's awesome. So one of the things we like to talk about, and again, we have a very broad audience. They can be brokers, lenders, investors, et cetera. And we actually have a lot of people tuning in that are younger in their career. So those individuals who are just getting started either on the brokerage side or the investing side, et cetera. Can you talk a little bit about those early struggles that you faced as you're looking to scale within your brokerage business? Because again, you start in 2009, which arguably is the worst time to ever start in commercial real estate because, people just didn't know what was going to happen. So can you kind of talk a little bit about, those experiences?
Sure. With one tweak, you still struggle, right? The obstacles change over the years. And I'm not the biggest gym guy. Anybody who knows me listening to this is probably laughing right now. I like to joke that the last 10 times I've been in a gym have been on space tours. So, at the same time, building muscle requires you to break down muscle. And so you need to do that in your own professional and personal development. And obstacles provide that friction for us to get better. But the obstacles change. It goes from building a book of business, trying to figure out how to add value, to ultimately becoming the accountable one, which it has a whole entirely different suite of concerns and considerations, right? Being the person who the client calls when things go south requires a very different level of availability, of grasp of detail and knowledge, of service. When you're just young and getting started, you're singularly focused on building your pipeline and book of business. You're judged by your meetings that you get, which is a very early metric in our world. And you graduate past that. But you're always dealing with different struggles. And I think anybody who says in any line of work during this period that they haven't dealt with struggles is crazy, because the pace of information has been so fast over and over and over again that you're required to become an expert in so many different things so quickly, and you have no time to rest, no time to recharge, and it's impossible to get away. And that's across industries. So I think we're seeing a falling out, I think, in our business of people who are saying, I don't want to do this anymore, because I don't think that pace of information is really going to change that much. I think our world as real estate advisors across the landscape is more complicated because there are more variables and more unknowns, and we're growing into a more bifurcated world. It's not this singular global entity anymore, and all of these things matter and have an impact on the landscape. But that's a little bit of a bearish vision, but the bullish vision is that, I think the future for this country is incredibly bright. We continue to be the top place to attract high-level academic talent. I think we have to do better at welcoming people into this country, particularly top-tier talent. But it's an exciting place to be, and we're growing and we're investing in different industries. So again, across the board, I'm incredibly bullish about what we do, but I think that there are some things that we need to think about as we continue to march forward.
Oh, phenomenal. Yeah, that's great advice. And I'll kind of add on to the, bifurcation of information and really the new technology that's going to be available down the pipe. Like I was mentioning prior to us hopping on the the discussion, that I went to a commercial real estate technology conference in New York City back in October. And some of the technology that's coming down the pike is amazing, especially when it comes to aggregation of information, then using data in order to project what returns would look like for, in a business setting. So I think those individuals who are willing to adopt that technology and are willing to augment their decision-making process with that technology can also, it's going to bode well for their business long-term. And, again, as far as the early struggles is concerned, again, building that pipeline, really understanding that you're going to struggle regardless. It's just going to be a different type of struggle as you advance in your career. So that's awesome.
I like to use the word on those for the one that's trying to scale is adaptation, right? I mean, the more adaptable you are, the more that you can change with the market and move on and go in ups and downs and how the market goes. So that's what I kind of like about it. And particularly on that, what are some of the common missteps that business owners actually make when they're evaluating their space, like the actual needs for the space?
For sure. So I'm going to give you an unsatisfactory answer, but
okay.
I think that the tendency is to go in extremes, and like anything else in life, the role of what we do. So at Savills in North America, we're 100% focused on the needs of the occupier. We're tenant rep, for the most part, office brokers, but we do industrial and retail and every other asset class. But the key with what we do here is we help mitigate risk. We don't remove it. We're not lawyers, but we help mitigate the risk. We help hedge the market, help you run a process. We don't say we're going to get you the absolute best price, but we're going to say that we're going to get you the best price possible. And so in that sense, the missteps is that when tenants confuse their real estate as a means to achieve an objective with being the objective, when the role of real estate is to be the fanciest without understanding the role of what the office should play in the organization, or conversely, where the whole goal is to keep it as cheap as possible, and because it just becomes a line item on the balance sheet, and you're losing the sense of why the office is really there. We're in a world where you can do your work anywhere. Just having an office doesn't mean people are going to use it. So you have to understand in this world, how that works. And I think people are embracing that. Not to ramble on too much, but we've seen a very interesting shift where real estate falls increasingly under the heads of people because they're dealing with the people. And while the CFO, heads of finance, have a very strong word in that, 10 years ago, it was more exclusively under the umbrella of the CFO. There's now a very clear acknowledgement across organizations that it is an expensive line item, but let's think about why we need it. And that's because of the people.
Definitely. No, are you seeing an acknowledgement that the office as it stands currently is going to shift or modify going forward? And again, a lot of these office leases, I mean, I'm sure in your market are, 7, 10, maybe even longer. So you're really not going to see the change of these space needs over time. But have you started to see people starting to realize, okay, well, either A, we keep our space as is, or maybe we modify it slightly to be able to attract people back to the office, or are they trying to, modify their space needs to maybe shrink their footprint and then have more of a satellite type campuses across the New York metro area?
So we're not seeing satellite offices around the New York metro area, only because just the way Manhattan exists, it's like the perfect compromise. You pull from Long Island on the east, you pull from Jersey in the west, you pull from Westchester to the north, and Connecticut. So everything kind of empties out into Manhattan, which is why you haven't seen the huge boom in New Jersey and Westchester as supporting submarkets for Manhattan. But in other markets, yes, you're seeing that. And you're seeing the usual winners, Austin and Nashville and Colorado. All of these places are certainly increasing, in interest. But we're not seeing a lot of contractions in terms of space. You are seeing some subleases, but it's usually binary. You're either getting rid of everything, not usually shrinking your footprint. And I've seen some data that seems to reflect that's pretty standard, that we're not seeing these massive reductions in office space. I think part of that is because we haven't been using the office space, so it's hard to make decisions based on non-utilization. And on the other hand, you have seen some groups that have decided to invest in their space. Savills, by the way, is one of them. We renovated our space in February to June of last year, reopened it during the pandemic, and it's completely changed, recentering around neighborhoods and different breakout spaces. And so there are others who have done that, but it's not as if it's enough to really signal a wave.
No, definitely. No, it's great to hear your insight on that for sure. So. Yeah. Tell us a little bit about, the site identification process. So let's say that your a tenant approaches you and they're looking to occupy some space in Manhattan. What does that process look like from site identification to ultimately placing the tenant in their desired location?
So it's a great question. I'm going to try to simplify it because the process is probably the same almost anywhere. I think the challenge with New York is just the number of buildings and options. And so, again, it's a 450 million square foot market in Manhattan alone. That's excluding New Jersey, Westchester, Brooklyn, and Queens. Not much of a office market in the Bronx or in Staten Island yet.
Sure.
The other two of the five New York boroughs. I think that the first thing that needs to happen is to just understand what they're looking for. And so usually we have a first conversation. We talk about their headcount expectations, current and future, and try to chart it out over the next few years. We then talk about what their timing is to need the space, because it can take 6 months to build space. Do you need it immediately? That is going to restrict the number of options that you're looking at. And there are several of these different variables, basically establishing the parameters for our search. And then, of course, the headcount is going to influence, based on the design of the space, the square footage needed. And so we have a rough estimate, and then we'll look at the market. Now, usually we'll include representative samples in the major submarkets. And if they're not from New York, talk them through the pros and cons of the different submarkets. If they're a certain industry that prefers certain areas, we'll obviously focus on those areas. But the whole idea within the preliminary survey is to extract information and get us more focused, and then do a deeper dive. And so we start with this universe. We add variables to shrink it until we get to a manageable short list of 10 to 20 buildings that we then tour, issue proposals, negotiate, sign a lease, and then build the space out or get it modified. That timeline that I've just whipped through quite quickly can take anywhere from, I think the shortest I've done it is 6 weeks, which would not recommend. It's only happened once, actually last month. And generally it's going to take, 6 to 12 months, the full process for an average size tenant. The bigger you are, the more time you need.
For sure. And are you seeing from the space needs, as far as the individual workers are concerned, are you seeing the square footage required per individual worker expand, or is that still kind of been similar to what you saw prior to COVID?
So it's always a pendulum, right? So, I think we are now many years out of this empty football field of packing people into 4-foot desks. I think one of the stickier parts of COVID will be this: I like my space, like don't encroach on my space. So we have seen the average square footage per employee start to tick up a little bit. It's not that their individual workspaces are now huge, that they have these very spacious cubes, but they have their dedicated workspaces, and there's additional breakout rooms, phone booths, private offices that they could break out into to have a little bit more privacy, so that you have that blend.
For sure. That makes complete sense.
So speaking of so you lease space to a client, and they're considering subleasing part of their space. What are some considerations that you need to consider to the client to actually sublease a space within their actual primary office? So is there anything that you can elaborate with that, or?
Well, so there are a few points. So
Sure.
We'd approach this as a first stage. We just do basic diligence. We look at the lease. Sometimes there are certain sublease restrictions within that document. So you want to make sure that everything is, all the T's are crossed, all the I's are dotted. Then we would look to establish what the value is in the market. So we're going to look at 2 different data sets. We're going to look at comps, closed transactions, and we're going to look at availabilities. And we're going to try to understand, based on the aesthetic, the vintage, the layout, the length of term remaining, what the market value is for that space. The third thing we're going to do is then go out, photograph the space, video it, put together sophisticated plans so that we can go to market. And the fourth thing we're going to do is market the heck out of that space. So we're going to broadcast it to the entire brokerage community. We're going to proactively reach out to individual tenants, both active and not, in the building and out, and make sure everybody knows about it. And then, of course, it's everything else that follows: managing the tours, trading proposals, shepherding a lease, etc.
Sure. And could you explain, like, I guess, the sublease process as well? Because I'm assuming the tenant that you currently are representing, they're still quote unquote on the hook if, let's say, the sublease lessor or the sublessee doesn't pay, or is that, can you explain that whole process as well, just for those for those individuals who are listening that maybe don't understand that?
Sure. So it's a great question. It's important to understand this point, particularly when it comes time to accounting considerations, because when you sublease space or assign a sublease, right, more often than not, the rule, not the exception, so sublease or assigning the lease, you remain on the contingent liability. And so depending on how it's structured, sometimes the subtenant pays the sublandlord who pays the landlord. But there is no way for you to exit out of that stack. The only way that could happen is if the landlord will terminate you and then cut a direct deal with the underlying tenant. And so that means that your security deposit will almost always stay in place. And so it's really, you're solving for, yes, on some levels, GAAP accounting, but you're also solving for the cash component too.
No, for sure. No, and I think it's just important to delineate that, because it's not like you're just absolving all your responsibility whatsoever. It's that, you're still responsible, quote unquote, if something were to happen, but at least you reduce your financial obligation on a month-to-month basis by subleasing your space. So it could be of value to you if you're looking to downsize or whatever else is part of your business. So awesome. So one of the things we want to ask you, which we kind of touched on briefly prior to us hopping on the call, was related to, the future of the office market post-COVID. I think, there's, like we talked about prior to the call, there's optimism right now. We've been getting a lot of calls from, people who are looking to start a business or looking to expand their business. So we really believe that 2022 can be a phenomenal and very robust year when it comes to transactions. So can you kind of talk to us a little bit about the office market in your area, and then maybe the broader office market as a whole, and how you foresee it evolving post-COVID?
So this is my whole world right now. Right, where's the office market going to go? And so I'm going to lay out a pretty bullish argument, recognizing fully that my livelihood is tied to this. My counter argument is my livelihood is tied to understanding this. And so I'm looking out for warning signs. If I think that the office market is going to go south, I'm out of here. I'm not going to stick around because I have to feed my family. And so this is not a biased view, although it is. But in my opinion, this is an expert view because this is what I see and do. In my opinion, remote work is here to stay for a small percentage of companies. Flexible work is going to be here to stay for all companies, almost across the board. We're not going to be in a 5-day-a-week environment. We're going to be in something less than that. But more importantly is going to be this understanding, focus, and emphasis on flexibility. Because when we speak with our clients, it's not so much that they don't want to be in Monday and Friday. They want the right not to be in Monday and Friday. And they want a reason to go into the office. And so when you think about, will the office market collapse, you have to look at the surrounding areas. And in New York City, you have such low vacancy in the residential market, which means people are coming here. And you have examples of companies like Quora, for instance, headquartered in the Bay Area. Several months ago, their CEO tweeted that a quarter of his Bay Area workforce was moving to New York to work remotely. And when you think about it, that makes sense too, because New York is amazing. Restaurants and nightlife and culture and excitement. And it's just great here. Again, biased party. And so if you could live in New York, but work somewhere else and not have to go into the office, that's amazing. And so you have all these people now in New York. And when people start to go back to the office in greater numbers, which inevitably will happen because people psychologically need to break from the trauma of the last 2+ years, they're already in New York. And so now their company has to open up an office in New York. And we're seeing companies do that, which is remarkable to see. Now, that's not, again, at the level where it's on the front page of the Wall Street Journal, but we are starting to see that. And so when I talk about the streets being a little empty, the buildings are fully full if they're residential. And so it's just a matter of time until that inflection point hits. And when that inflection point hits, New York is going to be ripping and roaring, just like we were in November and December, and just like we were over the early part of the summer. So That's a bullish case on New York. And I think that office market also is going to be beneficial to other areas too of the country. That's going to be on a select basis. Not everyone will benefit equally. But, I think the story about Des Moines, Iowa and their success as not a large city, I think that's being replicated in a lot of other what we had previously called tier 3 type cities. And so I think there's a promising case to be made, unless you're a strip mall owner in rural West Virginia, then maybe not.
Hey, I mean, you never know, I guess, but
Yeah.
but as far as what you were mentioning, I'm kind of the same mindset as you. We had a gentleman on that was for CCIM. He was my professor for one of the classes that I took. His name's Mark Seifert, and he's a investor in office buildings, and he invests in Dallas and Houston and various other parts of the country. And he utilizes institutional money to buy these large office buildings and either operate them and add value to them or repurpose them for another use. And he's very bullish on the office market for that exact reason. He thinks there's going to be a shift maybe to flex work where you have 2 or 3 days in the office and then everyone else is going to be, either from home one or two of the days. And at the conference I went to back in October of 2021 in New York City, you had the big brokerages like the JLLs, the Cushmans, and everyone else that were kind of talking about what the future of office looked like. And a lot of people, in particular, those ambitious individuals that want to advance in their career, it's very difficult to do that when you don't have face time with the leadership and showcase your leadership ability, and you have the ability to be able to showcase what you have. And so, I really do think that for those businesses that are high performing, those businesses that are, a cut above the cloth as far as what investment banking, et cetera, I mean, you're almost going to have to be in the office to be able to showcase what you got. So I'm very bullish, similar to you, on the office market as a whole, especially in New York City.
Yeah, the only thing I'd add to that, and of course I agree with you, I think that it's even more detailed than that, because you can be an extraordinary worker and you could do that really from anywhere. But it's much harder to manage people when you're not in person. You can do it. There are tons of companies that do operate remotely, but as a company grows and as higher scale management opportunities present themselves, it is very hard to do that remotely because you're just lacking that additional layer of communication. And so I think that the leadership opportunities will be a little bit more challenged to find for those who are in a pure remote environment. You could neutralize that by coming to the office sometimes, which is what we're going to see. But obviously, the more exposure you have, the greater it's going to be. Now, if the executive suite is never in the office, that's going to dictate it. But if the executive suite is regularly in the office, that's going to kind of drive something else. So I know we like to talk about how this is all grassroots and the power is to the people, and the labor imbalance right now is favoring the employees for the first time in forever. But this change will come top down. I think so at some point within the next probably 18 to 24 months. So you'll see some movement grassroots up, but at a certain point, all executives for the most part are going to say, okay, like this is what we're expecting.
Definitely, of course.
Yeah. I agree with you. I just want to start out rounding off the end of the podcast and say that we really appreciate you coming on. I know I do, and we learned quite a bit from here. But one question that we really like to ask all of our guests is about social presence, and particularly like on LinkedIn, and how to utilize that and what benefits have that had to help scale your business.
Oh boy, you're unpacking all the secrets here. So, I mean, let's give it away, right? Let's give it away for free. I mean, the whole idea behind LinkedIn is about scaling your reputation. That, in my opinion, that's what it's all about. And I think that those who are great at it have an online reputation and presence that reflects who they are in real life. It's much easier than pretending and trying to remember like who you're supposed to be. Just kind of be consistent throughout. And I look at LinkedIn as a means of addressing, from a business perspective, 3 different baskets. I'll rip through quickly. Basket number 1 is basically my latent network. So think, elementary school friends, high school friends, people I haven't spoken to in forever, who, if not for being connected on LinkedIn, would have no idea what I do. But if I ask them, hey, can you introduce me to so-and-so? There's a higher chance that they might have a sense of what I do. And if they don't, they'll know that I take it seriously because I'm pushing all this content out. So that's my latent network. Group number 2 is our brokers, right? Growing my relationships within the community, both within Savills in North America and out. It both increases my understanding, knowledge, but it also at the very same time has been a source of business for me, both servicing my existing clients because I've been able to farm it out, but also on the other hand, coming back in. And the third and last category is what I'm going to call my clients. So These are people who I've done business with before. We might not have an active real estate requirement at the time, but instead of sending you comp information that gets trashed every time, I'm just kind of on your radar. Maybe I'm a little annoying, hopefully not, but I'm just kind of there so that you can think of me. Those are the three main baskets. You'll notice that I haven't said direct business because that's not a goal of mine. It has happened. It's not a goal. It shouldn't be a goal. It should really just be about trying to amplify who you are in real life, but through the digital realm.
Definitely. No, and I think that it's very important what you say regarding, value add. So creating content that adds some sort of value to whoever consumes it. And I followed you recently through, just the post that you've done and very much exactly what you do. I mean, you sprinkle in some value related to real estate. You keep people abreast of the things that you're doing in your personal and professional life. And over time, if you're consistent about it for a long period of time, you help build that presence. And Jeff and I, we've been pushing hard on LinkedIn too, because it is that platform for professionals. And I think it is a great medium for you to be able to build your personal brand and professional brand if you are in the commercial real estate space. So we love hearing kind of your insights regarding that.
Yeah, I definitely like how you said, like, to help highlight your real life and not just that presence of what you expect and everyone expects to see. So I really like that point that you made on that. Another question we like to ask our guests is there a impactful book that you've read, could be lately or years past, that kind of like either directed your career or just changed your life? And it doesn't have to be real estate involved. It can be any book out there, but
yeah, I mean, I can tell you that right now, so I go through this right now. I'm not really reading the books. Like, I've got a very short attention span. I'm on like the tweets and the 5-minute articles right now, but like that's kind of my thing. Like, it'll slide back, then I'll go to magazine articles, and then I'll land in books. But before I slid down this slippery slope, I read this fantastic book. It's a biography called, I think, The Last Pharaoh. It's about Richard Daley, the first in Chicago. And it talks a lot about a pretty critical historical time in this country. And it talks about like little things that resulted in big outsized impacts. And it makes you realize that everything is local, and that small decisions, 40 years later can have a huge impact. And I'll give you one of the main takeaways from that. When you think about it, why is Chicago, Chicago, but most other major cities in the Midwest are kind of shadows of their former selves? Cincinnati was for a time being, I think, the most populous city west of something. And now it's a great town. Wife's from there, home to Procter and Gamble, but it's just not what it once was. Well, Chicago invested in airports. They invested also in Midway. And O'Hare, and so it became a destination for business, and they really invested in it. That was a conscious decision that happened under Daley. So by understanding history, hopefully we avoid the mistakes of yesterday and can learn how to take the good into tomorrow.
That's phenomenal. Yeah, I love reading biographies. I've read a whole gamut of different biographies from different people. Made in America, Shoe Dog. People who make an impact on society in some fashion, you can garner a lot from their thought process, especially in the early days of their career, because, they probably dealt with similar struggles as far as what they wanted to do with their life and maybe some of the paths that they could ultimately take. And you can draw a lot of lessons from those experiences. So thank you for sharing that book. That's phenomenal. So again, Gabe, we really appreciate you coming on the podcast. Again, we know your time is valuable, and we really do appreciate you taking some time with us to be able to share some insights with our audience. To round out the podcast, what we typically like to do is we like to ask our guests to provide something to what we call the commercial real estate treasure chest. It's a repository of resources that we make available to our audience, 100% free. Typically, we've had people in the past provide maybe PDFs, helpful spreadsheets, articles, ebooks, et cetera. So we just wanted to kind of give you an opportunity to share what you're willing to contribute today.
Yeah, for sure. Well, thank you for giving me the chance to add to this this treasure chest. And so, I mean, let's say topical. I mean, there's a lot that we could share, but I think we've got a really handy look at workplace trends and what we're seeing employers, occupiers do in order to design a workspace that can further encourage employees to come back to the office. So what are we seeing? What directions are we heading in? Designed by our fantastic workplace strategy team here, who helps companies think through that. Be more than happy to share some of that, and hopefully some of the listeners will find that interesting and compelling.
No, I'm sure they will. And that,
Yeah.
and that it's a topic that's extremely pertinent and relevant right now and to people across the nation. So that would be awesome to kind of hear you.
Yeah.
Or that contribution.
You got it.
Cool. Yeah. Listen, Gabe, I know we want to say thank you and we appreciate your time and everything. And I know some other people would want to probably contact you and maybe talk to you about markets and everything. So what is the way they can actually contact you? Do you want email, go through a website? What was the best way to contact you?
So best way is always email. So it's just gmarans@savills.us. If that's too long for you to remember, you can go to gabemarans.com and you can send me an email that way as well, or on LinkedIn or Instagram or TikTok or Twitter. Basically, you got to run from me for me not to get back to you. Challenge accepted.
That's awesome.
Perfect.
And we'll include all those links in the description below too. So if you guys are watching this in a YouTube format, it'll be in the description. And if you guys are listening to this in Apple Podcast, Spotify, whatever, we'll include that in the description as well. So again, thank you all for tuning in. If you guys are listening to this in a podcast format, we would greatly appreciate if you leave a 5-star review. We've seen a significant uptick in our downloads as a result of you guys engaging with the podcast and leaving a 5-star review. So we would greatly appreciate if you could leave one. If you guys are watching this on YouTube, please like and subscribe to the channel. It helps with the YouTube algorithm, ensures more and more people can hear this message. So thank you all again for tuning in, and we'll see you all next time.